Hey everybody, so today I wanted to look at Bitcoin on the macro scale. So, of course, in this bear market, we've had a lot of things happen that have drawn the price of Bitcoin lower. We've had this overall bear market in equities and cryptocurrencies due to tightening rates by the Fed. Um, this is because of, it was originally because of supply chain shortages and, um, the excessive printing that went on during COVID and earlier administrations as well. But moving forwards, let's look at Bitcoin. So we've seen that we have this. Um, it has been relatively in this consolidation phase since um, the end of June. And one thing that I noticed is that if you look at note this resistance level here at about 12,500. Okay, if you go back to the previous bear markets, such as the 2019 bear market, you can see that it never really passed this resistance level right here. So in the 2019 bear market, the resistance level was about 3,500, right? And it went through this consolidation on right on top of that resistance level. Okay. In the bear market before, right, the 2015 bear market, it also stayed right on this resistance level. So this is what we're going to want to watch, the 12,500 level, if we want this to be a normal bear market in the way that the last two have, right? So if it goes past the average of these two, let's look at the average of these two. So this is 12,500 on the top, and this is about 4,000. So if it goes under 8,000, then that's a very strong indicator that this bear market could be very different than the others and it could draw down further significantly. But based off the prior precedent, 12,500 seems like a good level to hold. Obviously, we might have some major moves after the December 12th Fed meeting where they will discuss tightening further. You know, a 0.5 or a 0.5% rate increase seems slightly likely, and in which case it'll probably draw the price of risk assets down. Um, right. Let's look at the weekly scale for Bitcoin. This is the volume weighted moving average. This is the 100. This is the 200, and this is the 300. This is the fusion oscillator. It's now public on TradingView, so you can add it to your charts for free. Just search Fusion Oscillator, and it should pop up. It has about um, yeah, it has about 200 boosts on TradingView. So if we look at the past resistance levels from the volume weighted moving average, this is the true volume weighted moving average, not the way that TradingView calculates it. But if you look at the previous bear markets, let's look at the first one in 2014. This one was completely 2016. I'm sorry. This one was completely tethered on the 100 week moving average here. Okay, volume weighted moving average. If we go to the next bear market, this is based off the 200 volume weighted moving average. Okay, and we saw that during COVID, it went all the way down to the 300 right there, the wick right there. It went all the way down to the 300. So what do you know? The 300 is about the same level as that resistance level for the daily scale, the compound support resistance band. It's about 2,500, 3,000. So if this second level, this 200 level, does not hold around 17,000, okay, if that doesn't hold like it has in the past 4 weeks, then we can see it go down to about 13,000. From there, um, let's look at 400, just based off of, during the past bear markets, it went from 100 to 200. That's also, a double. So if we look at this geometrically, it could not go down to 10,000. Of course, that's not anything that anybody wants to hear, but hedging your bets, that's probably what it's going to do just based off this data. Another thing, if we look at the fusion oscillator, so this yellow line here, this pale yellow line, that's a non-directional oscillator. The white line is the directional oscillator. The directional oscillator is the RSI, MFI, MACD, CCI, TSI, and RV combined. Okay. What you'll notice is that during the bottoms of the bear markets, right here, it passes below -1. Okay, this happened in uh, January of 2019. Right here, it wasn't as prevalent, but it did still go down significantly, and it was just building off of what the prior one was right here. So, but right here, it also went down below -1. So, in terms of the money flowing in, because this is also the money flow index in here. If we can see this continue going, if it passes back over zero, that's a sign that it's going to, start a bullish trend, like right there when it passed back over zero, and right there when it passed back over zero. When it fell back over zero right here, that was the sign of a bearish trend, and the same thing for right here and right here. Okay, so those are the levels that we're going to watch, right? To the 12,500, about 13,000. And if that doesn't hold, go back down to about 10,000. So this is all dependent on the Fed meeting on December 12th. And after that meeting, I'll shoot you all an update. But for now, stay safe and make sure that you're putting your money to places that matter and that aren't, hemorrhaging money. I can't give any recommendations, but um, you know, I'm still buying Bitcoin. It might seem like I might seem like a lunatic, but I still am, and that's mainly because of the supply. The price, the supply is monotonically, uh, you know, sloping into a, a deficit where there's no more being produced, and that'll stabilize the price, causing less volatility in the future and higher price movement. But um, you know, what you put your money in is up to you. So I hope you all have success, and I will be back, December 12th to update you all on what's happening. So thanks for watching. This is technically bullish, and subscribe if you want more.